Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. Okay, so let's get to the technicals for Bitcoin now, and I believe the key downside level to watch is probably 19,800. If that were to break, I think we could probably revisit the lows of the year, and that would be a very, very bearish sign for the market. 23,500 is a massive pivot for the market. I'm going to explain why in a moment, but that would be the area. If we started to anchor the daily candle and the weekly candle above 23.5, then that would be a very good sign for the market. In terms of the weekly pivot point and the scene of the breakdown last week, it was around 22,700. So that's the sort of area that the market could go back to test the validity of the current recovery in the market, and if it's got any steam to it, or it's just going to be another selling opportunity within a bear market. I would say at the moment, I'm not too much happy to predict a move lower than 19.8. If that breaks, then I'd be looking for 16.4 as a minimum downside target to the market. Daily price closes below 20,800, as I'm going to show you in a moment, will probably be a bearish signal, but that's been holding up very well. So let's get to the technicals for Bitcoin. Now we can see the larger picture here. We can see this bullish falling wedge type pattern. And we can also see that Bitcoin has been holding this key trend line support as a bit of a launch pad. So I expected that the market was going to test back towards the 20,000 area, which was basically the top of the wedge. So that's what I thought was going to happen. And out of nowhere, the market died down. I did lay out last week that we'd seen some big Fibonacci targets hit in the market. And that was one of the reasons why the market was moving lower. So now those targets have been hit. It just remains to be seen, is that going to be the final rally? And once you break underneath the 22,800 area, there's not a lot of support going down until maybe 16.4 and then the bottom of this wedge pattern. So very, very important juncture for the market at the moment. And you can see that this has been basically been used as a launch pad, this trend line support here for Bitcoin to bounce off. And there's been no selling interest underneath there because the market knows that there's going to be a big drop. So that's been defended very well by buyers. What we could see is a pushback towards this top of the flag pattern around 26,500, which coincides now with that falling trend line of the larger wedge pattern that I showed you earlier. So that fits very, very nicely, but the overall pattern is bearish, and that would indicate that maybe if we did push high, we can get some type of failure around that area. But I'd much rather get to a more attractive selling opportunity for the market in September if it did get up to that point. But in the meantime, the most important thing that I'm telling you today is that the 22,800 or this trend line really has to continue to hold, or we're going to see a big fall towards the mentioned targets. In terms of what's going on in the market at the moment, it's basically suggesting that if Bitcoin can get above 21,800, then this head and shoulders pattern here, this very small head and shoulders pattern, is going to be invalidated, and we can see a pushback towards the weekly pivot point that I mentioned earlier at 22,700. So that will be a natural target. And as you can see last week, that was the scene of this was the scene of the crime where the market started to break down. And once that support was broken, we subsequently saw a massive price crash. So it makes a lot of sense that we test towards this high volume area, and also the breakdown area for last week to test the strength of weakness in the market. It's also a very, very important technical area for some time in the market. Alternatively, if we were to fail up here and make potentially a larger head and shoulders pattern, then the market could just drift back down towards 22.8, and that would set up a move almost perfectly to around 19,800. So that's what I'm looking for in the very immediate term for Bitcoin. Also, I want to point out technical indicators. We've had another buy signal join to the other strong medium-term buy signals that we've had recently. So the hash ribbon indicator has turned bullish for the first time since June, and it's actually the first buy signal in a year from the indicator. The only thing that I don't like is that the indicator hasn't corrected very much, and it does remain to be seen how much higher it can go, because it's pretty much, given a minimal correction, but then the buy signal has been given, and it's still pretty weak because it's not moving away from the moving averages. So it's a very tentative buy signal, but I wanted to let you know about that. And also the buy signal on the MACD, even though we had a big price collapse last week, it's still issuing a buy signal on the weekly MACD. So that's very, very interesting. Throw into the mix the PI cycle bottom, and we've got three buy signals on a weekly time frame, which is very, very interesting indeed. Again, everything, just to summarize, everything really comes back to this flag pattern over the coming days and what we're going to see in terms of price moves. I think if we were to get above 22.7, my first target would be 24,000. Again, if we break down, then we could probably see a move down to 18,000. I'm going to be talking a little bit more about that in the educational segment in a moment. So overall, Bitcoin is trapped within a massive wedge pattern. Trendline support is currently holding the decline. A drop below 20,800 could cause a significant decline in the market. Bulls really need to rally price back towards last week's breakdown area and get above that area crucially. And the hash ribbons indicator is now joining the chorus of technical buy signals for Bitcoin, which sets up an interesting scenario where there's still a chance for some type of wider recovery in Bitcoin. Although how that's going to come, I don't know. And you would have to have a good think about that, considering that the macro backdrop for Bitcoin and the lack of volume, the buying interest. You'd really have to consider the validity of that getting past 26,500. I don't know how much legs it would have beyond that. Okay, so let's have a look at Ethereum now. So very similar to Bitcoin in terms of this falling wedge pattern. We did move up to the 2,200 area, which was very easily flagged on the charts and somewhere where I was expecting to fall. Again, it was a Fibonacci target that got hit and the market's crashed. But encouragingly, we're seeing the 50-day moving average hold, which is different to Bitcoin. That as Bitcoin trades underneath its 50-day moving average, Ethereum is still looking much stronger technically than Bitcoin at the moment. One thing I do want to point out is the scenarios going forward. So as you can see here, we have two opposing patterns. The first pattern here is this head and shoulders pattern. If we were to get some type of fake breakout and move underneath here, then the chances of a move down to 1,200 due to the size of this pattern turning into a bearish pattern quite apparent to everybody. However, if the market was to move above 1,700 and stay above there, we could then go back and test towards the top of the falling wedge pattern and make a much larger inverted head and shoulders pattern, which has a huge target attached of around about, I would say, taking this to 3,400, something like that, if that were to play out. But looking at the bearish scenario now, if we were to drop from current levels, we could form a larger head and shoulders pattern, which is very worrying, and that would then take us down. If that were to ignite, that would take us down to around $800, and then you can see how that could potentially play out if we were to drop for current levels. If the recovery towards $1,700 started to fade, then that could be very, very worrying. So for me, to avoid the worst case scenario, we need to see sustained strength above the 1,700 area. Or we could easily see these series of head and shoulders patterns starting to play out in line with the broader trend. So if we start to get above this red line and hold above there, we could still see 2,200, especially with the merge. And also if we see Bitcoin starting to anchor above 22,700. So overall, Ethereum is pretty much back in trouble below maybe the 1,680 to 1,700 level. Keep a watch on the potential head and shoulders patterns unfolding. A return to the summer lows could be on the cards, especially if we break under 1,480. I believe that 2,400 is still possible if the market recovers after Jackson Hole, although it's going to be a very tough road back after Jackson Hole if we break underneath the 1,480 level, and especially the 1,400 level.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.